The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks, to the Commodity Show for TFNN. The first chart that I've placed into Tiger TV today is the Dow Jones Transportation chart on a monthly basis going back to 2009. The reason why I started with the transports is because this is how they move all these products that we're growing and making and selling, and as you can see, there's a perfect AB equals CD pattern. The number of weeks up, the number of months up in the Dow Jones Transportation is equal between 2009 and 2012, and it's perfectly equal from 2012 through 2014, where we are right now. We've made a ABCD correction. It's perfect in time and price, but I'd like for you to keep a picture of this, because you'll be able to show your grandchildren that, see, it really was different this time, and things don't work technically all the time, which we already know that. Now, the next chart that I wanted to show you is the same chart, only on a daily basis, and it shows how yesterday we had the big breakout to the upside, and today we have reversed that, and we've gone back below yesterday's low, and we're far below the 1.618 expansion of that number. Whether that means anything or not, I'm not sure, but a lot of these markets are beginning to show a little bit of an overload pattern, and whether that's going to continue over a long period of time, we don't know. But the transportation index has certainly completed every possible time and price parameter that you could possibly look at over a period of time, and I think that's very, very important. Now, the first request we had was to take a look at the gold stock that we recommended a few weeks ago, and that was American Barrick. And if you'll give me a second here, I will get American Barrick up here and move it up. I've got a complete new computer system built in now with new headphones, and I should have, they tell me that it's problem-free, but frankly, I'm not really sure. But we've had a pretty good move from the bottom in American Barrick down there at around $15 and change. We got up to 18. Now we're in the midst of a correction. We're seeing the same thing in the gold market, that we went up to some pretty strong resistance, and we're going to be looking at gold and silver a little bit later. But I wanted to discuss American Barrick here because we should have some strong support down around the around the $16 level, which is another 10% from where we are right now. So whether that gets that much of a sell-off or not, we're not sure. But we've been down for 2 weeks since our high was made, up around 18.5, and we're still only trading at 18.04. That tells me that if we can clear 18.72 cents a share in American Barrick, that the gold market and the silver market will most probably be moving higher, because the picture does look relatively bullish, compared to all the other stocks that I'm looking at. It does have a chance to go that. However, if we go below that $15.50 per share in American Barrick, then I would think, all bets would be off, and I wouldn't want to be bullish those any longer. Now, the next chart we're going to talk about in the commodity markets is our gold chart, because we looked at the big ABCD here a few weeks ago, and we came off of there pretty strongly. We went up and made a 382 retracement off of the high that we made in October, up at 1360 per ounce in the gold, and we were able to rally $70 an ounce here in a matter of about 10 trading days, and now we're in the midst of a correction. We've hit that 1255 level, and I believe we could get all the way down to 1208 one more time with some a little bit more selling. But it's beginning to look like we have a chance for the gold market to make a turn here. However, if it goes below that $1,750 per ounce level in the gold, that's going to be a tremendously bearish number. So we really must hold those double bottoms that we made last June, and again that we made right around Christmas time this year. It's quite important that we hold those lows, and I believe that we will. But that's just my belief. And remember, everybody has an opinion, and it usually smells. So keep that in mind when you're looking at the gold market. The little sell-offs that we've had so far in gold have been very, very minor. They've only been of the 0.382 variety, which tells us that we have a little bit more bullishness in that market than some people are realizing, because it's held up, so extremely well. The chart that really has my attention the most on this gold market is the long-term weekly chart, because we have everybody so very bearish gold and silver now, and we've completed just about a perfect 61% retracement from the low from 2008. And this is if you're following the trend, this is a long-term uptrend, folks. There's no question about it. The fact that we've had a 33% correction from the high really doesn't enter into it, because that's normal in markets. They usually correct somewhere between 38 and 61%. So it's a very, very bullish market. Remember, we started this bull market back in 2003 with gold at around $250 per ounce, and from there we went up quite a bit. When I first started trading at Drexel, the gold had just been legalized for trading a few years ago, and we were just going above the $200 per ounce level at that time. That was Nixon took us off the gold standard when they repealed the Bretton Woods Agreement in 1972, and gold began trading at about 120. And when I started at Drexel, it was just above 200, and that was my I had a nice move during that time. Anyway, it was a good time, and I remember it very well. I have to tell you a funny story that since I was reminded of this yesterday by a good friend of mine in 1980. It was the summer of 1980. I think it was June. The kids were out of school, and I took the family to Hawaii for a vacation, for a 3-week vacation. Drexel forced me to take a vacation because I hadn't had one in 3 years. All I'd been doing is trading, so they forced me out of the market. And so we were in Honolulu, and I took the in-laws too, and we were in a jewelry show. And my ex-mother-in-law really wanted this little pin that had her initial on it. And it was in coral and had a few little gemstones in it and stuff. And so we looked at it. Then we went to lunch, and then I said I wanted to go for a little walk. And my daughter Jill, who was 10 at the time, said I wanted to go with you. And so we walked out of the restaurant, and I turned left, and she said, "Dad," she says, "you're going the wrong way." And I says, "What do you mean?" She says, "I know where you're going." And I said, "Where am I going?" She says, "You're going back to that jewelry store and buy that pin for Grandma." And I said, "You got to be kidding." And that's exactly what I was doing. So we go to the jewelry store, and I walked into the place. I think it was around $700, which was not a lot of money at the time. And I told the guy, I said, "I'd like to buy this." And I said, "I don't have that much cash with me." I said, "I have it in the safety deposit box." And we didn't use credit cards back in 1980. And he said, "No, that's okay." He said, "You go ahead and take it, and come back tomorrow and pay me." I said, I said, "What kind of businessman are you?" I said, "That's not any way to do business." He says, "I'm a very good businessman." And I said, "How do you know this young lady here isn't a shill?" And my daughter says to me, she said, "Dad, what's a shill?" And the jewelry guy said, I just made my point, didn't I? And I laughed. I was thinking about that yesterday when I was talking to my daughter, and so it was kind of funny to remember that. But I had one of my greatest errors that I ever had. Drexel wouldn't allow me to trade while I was on vacation, but I had an order in, and I had forgotten to stop it. I sold some gold short, and then I covered it, but I forgot to cover the buy stop. And when I was gone, gold had a tremendous rally of about $150 an ounce during the time that I was gone. And when I came back, I had a big win in my account, and I had no idea what it was. And it was an error because the buy stop put me long gold with no stop or anything because I didn't know I was in it. And so as soon as I got back to the office, I was able to close it out, and it paid for the vacation a couple times over, which was fun. But anyway, all right, back to the commodity markets. We've got some wild things happening. We've had some big moves in corn recently. It had a tremendous move to the downside, and then it had a tremendous short covering rally after the market had the USDA report last week, and we rallied about $1,500. And what I want to do now, I was trying to have Rich Anderson on today, but with all the cold weather in Minnesota, Rich is smart enough to get out of town, and he went to Venice, and I don't know when he's going to be back, so we can't reach him on a landline there, so we'll eventually catch him. So just give me a second. I want to put up the corn chart because I think we're at what I think is a low-level buy in corn. I could be wrong, but it's one of those spots where you don't get it very often without risking a whole lot. And we'll put it up here in just a second here, and we'll let you folks take a look at it because we did have a big sensitive move. Okay. This will show you the big move we had after this came off of a 1.618 expansion also, but as you can see here, we had a rally of about $1,500. In fact, it was exactly $1,500. And what we're doing now is we're coming down and we're making a 382 retracement of that move. So you're able to buy corn around the 425 level. You don't have to risk more than a nickel here because if it doesn't hold 382, it's gonna go all the way down down to the 618. You don't want to stand in front of that. So it's a very, very, very low risk trade if you like to look at Fibonacci numbers and patterns. And we certainly have had a breakout to the upside. I don't think, well, at least it's a giant short covering rally, if nothing else. So we got a little break here. We got the Dow up 65 and down 85. Oh, that must be a misprint. How could that be? Huh. All right, we'll be back in just a little bit.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, we're back, folks. And last week we had a gentleman call in around about natural gas, and at that time it was completing a really nice Gartley pattern down at the 3.96 area, and we've rallied almost to a new high now. We're up around 4.46 cubic feet now, so it's really moving strongly, and it looks like it's getting ready to break out to go much higher. But at that point, we had a really nice pattern, and what was good about this natural gas pattern is one of the things you like to see after you finish point D is you like to see a really strong, like a bullish engulfing candle, much like we had on the low day, but then the next day the market gapped up and really extended its gains, telling you that it wanted to go a great deal higher. So natural gas looks like it certainly wants to move a lot higher. And if anybody is qualified to talk about natural gas, I think it would have to be me. So anyway, the next one we're going to take a look at, since we're in that complex, is we're going to take a look at crude oil, because crude oil has been doing almost the same type of thing. We've been holding, that long-term 786 level that we tested twice before, and we'll get this up and take a look at it. You'll see that after we broke down below the 61% retracement at 96, the next fib level that we looked at would have been the 786, and of course we went down to the 91.5 level. We almost hit 91 exactly, and then we've rallied $3 a barrel, which isn't very much, but it's $3,000 if you were fortunate enough to get any of that. And now we're in the midst of a little bit of a correction in crude oil, so this is going to be very important. the main thing about this chart is the fact that we've only had a 4-day rally here in crude oil, and if you'll take a look at these, at the chart that I posted into Tiger TV this afternoon, you'll see that in the past, during this big bear market, we had 3 major 3-day rallies on the way down. They never went very far, but the market just cascaded down after all of those were broken. So keep in mind that if we break that 91 level per barrel in the crude oil, we could easily be looking at the mid-80s for the price of crude oil. And we're having, as most of you know, a lot of the commodities are in a great deal of pressure. Wheat and corn and a whole bunch of things are under a great deal of pressure because of what's happening. Cocoa, sugar, coffee, orange juice did a little bit because of the thing. Natural gas did okay because it's been oversold. Remember, it used to trade for 15 and it's only trading for 4.5 now. So there's been a great deal of deflation. If it hadn't been for the Federal Reserve, we wouldn't have, who knows where these commodities might have been. Now, like I mentioned before, I posted that transportation chart to start the show to show you that the time and price parameters for the transportation index has been completed. We went above the 1.618 number yesterday for a short period of time, and then we quickly reversed and went lower today. That doesn't mean we can't turn around and even go higher, because that's still possibly in the cards without any trouble at all. So we'll see if that's the case. I've had a request to take a look at a particular stock that makes automobiles, and that is Tesla. And if you'll give me a second, I will put the chart up. I guess we could put this under the commodity hour because we had a they do use gas. No, wait, I don't know if Tesla uses. You know what? I don't even know. I've only seen one Tesla here in Tucson, and it looks an awfully lot like a Jaguar, but I've never seen one on the road other than driving by the shopping center here. But we're very, very close to making a bearish Gartley. We had a 3-drive to a top pattern at the high, and we're not too far away from a bearish Gartley in Tesla, up around another $6 from where it's trading right now at the 176. It's trading around 170 now, and it could easily get to 176. In fact, it opened a little bit lower today and then went a little bit higher. We've got to take a little break here. The Dow is down 73, the NASDAQ is up a little, and the S&P is down 3. Okay. Boy.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we posted a chart of silver as it relates to gold. And as you can see, it's gone above the 382. It's pulled back below it now, but it still is another confirmation that we've made some type of a major bottom here in silver. And we have a request from someone in Massachusetts, Stephen. We've lost him on the line, but he must be a Texas Hold'em player because he's asked us for a chart on Pocket Aces, AA, American Airlines. I think that's what it is. It used to be anyway, back when I was a kid. Let's see if we can get it here. Yep, it sure is. And wow, this thing is all over the map. I used to have some friends that worked for United, and boy, did they ever! They were in a retirement. They were in a retirement program from hell. This thing is going back. It went from 43 to 3, so it was not very good. But if we take a look at American Airlines today, it's having looks like a really big move. We're breaking out. We've gone from we moved about 10% here in American Airlines in just a little bit, but frankly, I couldn't get too involved with this. This is just a quick rally. If you go back and look what happened to this stock back in 2012, Stephen, you'll see you had the same type of move. You moved very, very quickly, and then it turned around. You could easily get the stock to go to 11. There's a ABCD pattern. I can post that one in here and let you take a look at it. If I can draw it right, if you'll give me 1 second, I will be able to draw it right. And I don't want to do that, and I want to do this. Bear with me here, and I'll put this in here. You'll see it could go another 50 cents higher, and then I think it would be in some trouble. I wouldn't be touching this, especially when we're looking at a transportation index on a monthly, and I believe that American Airlines is in that transportation index that is making a it should be a, I've got the wrong symbol. It's AAL. I'm awfully sorry, folks. I'm not a stock trader, and I'm not going to change now. So let me put AAL in here, and we'll take a look at it and see if we can answer the question from Stephen in Massachusetts, since he's probably out for the first time in a month or so with all the bad weather they've had. I don't know what AAL is, but we'll take a look at it. Maybe this is American Airlines. It still is AA. Oh, AA is Alcoa Aluminum, isn't it? I remember that from my high school days, because we had an Alcoa aluminum plant in Terre Haute, Indiana. Okay, this one is going back, wow, this has just had a huge, let's do the weekly chart on this one. And if this is part of, I imagine this is the part of the index 2 for the transportation. And if we take a look at it, you'll see that we are above the 38%. We're almost at a 50% retracement from the move that we had way back in 2007. So I don't see anything to do in this stock here except possibly go short. If you look at it on a daily basis, I can see this from the weekly, but if you look at the daily basis, we've got a very, very distinct 3 drive to a top forming right now. I can put this in and let you look at it. It's pretty much a textbook pattern. It's got everything that you'd want, and you haven't taken out the highs from early January yet, but that's a perfect ABCD pattern on AAL, and so we'll see if that's going to be the case. I'm assuming that AAL is American Airlines. I thought it was AA was American Airlines because I play Texas Hold'em, and they always refer to that chart, to that hand when they throw it over. They always say American Airlines. They don't even say double aces or pocket aces. They just flip over the cards and say American Airlines. So I'm assuming AAL is Alcoa Aluminum, which wouldn't be in the transportation index. It would be more in the industrial index. You guys are trying to trick me with these commodities, and I haven't seen a chart on aluminum, since Hector was a pup, and that's been a long time. So I don't really know, what aluminum is trading at. If it's anything like some of the other commodities that we have, I know they're getting hit, very, very badly. Speaking of that, and since we're talking about demand, someone did ask me a question before I even came on the air today to take a look at where the demand for some of this stuff might come from. And one of the places we want to always look at is the emerging markets. And so I'm going to take a look at the emerging markets now. And remember, we have been going straight up in Germany and straight up in the UK. We haven't been going straight up in Asia or anything like that, but we certainly have been going. But now they're telling me that AAL is American Airlines and AA is Alcoa. Boy, that's going to be interesting information when I play this weekend in a tournament, because everybody refers to it as American Airlines. So we'll have to see. Anyway, I'm going to post the chart in here for the emerging markets, and you can see we've been in a downtrend in the emerging markets since 2013. But if you go back even to 2008, we've been in a downtrend in that market for a very, very long time. I'm going to go back and show you. Let's just do the weekly so you can see, how poorly the emerging markets have acted over the past 7 or 8 years. The fact that we've had the lower tops all along the way since 2007, and that's what we're looking at right now. Is that we haven't had very little demand coming from places outside of the United States. So we have it straight. AAL is American Airlines, and AA is Alcoa Aluminum. So when I was in high school, that was in Terre Haute, Indiana, that was one of the best jobs you could have, was to work for Alcoa Aluminum. They paid like 3 times what the minimum wage was, which that time was, I think, 85 cents. The reason why I know, because when I was waiting in line to sign my unemployment papers, Moses was right in front of me. So if you can imagine, of course, back then, the first McDonald's had just opened up in 1955, and a McDonald's hamburger was 15 cents, French fries were 15 cents, and a milkshake was 15 cents. So for 45 cents, you got a complete non-fat meal. But things have changed, as we know. Okay, we looked at the emerging markets. It doesn't look like they're ready to break out to the upside. It's just been basically the United States that has been doing the same thing. I wanted to cover, we had a question about the VIX index, and that also has been something that has been rather mystery to me with the strength that we've had here in early January in the stock market. The VIX index has not made new lows, which is rather surprising considering that we had a up day of 160 some points in the down day, and even on an up day, and even on the down day, the VIX index didn't even move very much at that time too. So it's beginning to look like to me that someone is accumulating some type of a hedge against some type of a major increase in volatility, which I really believe 2014 is going to be the year of volatility. That's what I think is it's going to be back in the about what we're going to look at. Someone just mentioned in the Tiger Room that White Castle hamburgers, which were very popular in Indiana, used to get 12 for $1, and it was that was a long time ago. But they still sell White Castles. They sell them here at Safeway for frozen, of course, and they certainly don't taste like the White Castles that you get at the store. So I got to stop giving so many commercials without getting a rebate. Okay, one other question someone had about the stock market, whether it means anything or not, we'll have to wait and see. But I wanted to post a daily S&P chart for the E-mini S&P because we've had a situation here. 1 second. I have to make one adjustment so that I can get the chart on point here. But we did not make new highs in the S&P from the new moon of December 31st, and we had the full moon yesterday. And so whether that, because we were going up into that full moon, I'm assuming that is a significant cycle top, but we won't know. But if we do break above the high from December 31st, that would tell me that the Bradley model is totally off. And, the market's going to go to some place that this old cowboy hasn't seen it in a while, and we'll just wait and see what happens. We have not taken out the high in the New York Stock Exchange Index at all. That has not broken the high from December 31st. And we've also have not taken out the high. We took it out in the NASDAQ, of course, but we have not done it in the Dow Jones Industrial Average, but we did do it in the Russell. So some of these they're rolling over much like they did in the time frame of 1999 and 2000. But this isn't that type of market. That was a once-in-a-generation type market that went absolutely crazy. A price target for American Airlines is that's it. I think you're at it right now. I wouldn't expect it to go much higher than where it is right now. The price target for Alcoa, I think that's pretty much it in Alcoa too. Let me pull it up again, and we'll take a look at it. And I think it's made it. I mean, Alcoa has made a big pattern there. It's made a 3 drive to a top pattern at 29.90, and it's trading at 29.19. I mean, I can't see if you're going to squeeze much more out of this. It might go a little bit higher, but your risk reward here is backward, in my opinion. If you're trying to squeeze out more, the ABCD measures to 29.5, and it got to 29.62, so that's close enough for me. But maybe you're using fundamentals or something, but I don't see any reason to be long Alcoa in this move. We haven't backed off very much from the high. We're down 4 days of doing nothing, so maybe it'll go up to the upside. But one thing I would do is I would put a stop at 28.5, because if it gets below 28.5, it's going to break out last week's lows, and I don't think you want to be in the stock that does that and closes on the lower part of the range, because it could go a lot lower. But if you have a long-term view and you want to use a trailing stop, just pick yourself a trailing stop, $1 under where you're at or $1 above break even, wherever you want to be, and just hang on, because it might be different this time. There's always that possibility. We had Mr. Bernanke on today, and they were, lauding his wonderful expertise of everything that he did, and he based it on a paper that was done by a German gentleman in 1845. So maybe that is the key to all the central banks, that all you have to do is to pump money into these things, and that's all. No more inflation. We don't have to worry about inflation, because prices keep going down, 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 except when you walk over to the supermarket, and they don't go down, down, down then. There's no question about that. So just keep that in mind, folks. So that's what we're watching. Now, the next market that I wanted to cover here is our Treasury note market, because we've been telling folks that we're way oversold, and we should be getting ready to have a really nice rally. In other words, short-term rates to go down a little bit more, and we're beginning to start to see this very, very recently. We got bonds up a couple points from the low, and we are getting a little bit of a bounce in the Treasury notes right now. We've been up about a week. Rates are down about a third on their yields, so we'd like to see the rates drop a little bit more. 30-year mortgages are still running at about 4.4%. Their bottom was at 3.5%, so we had a 25% increase in mortgage costs. That put a little bit of a damper on what was happening with the real estate market, at least for a short period of time. We've got the Dow down about 70 points. We've got the NASDAQ up 4. The S&P is basically down just a couple of points, and the Russell is pretty much unchanged, and not much else is happening with anything else, and we'll see. We've been asked to take a look at TBT, which is the ETF for the 30-year Treasury bond, so we're going to pull that one up. We might have to hold that till the break, but we're going to do it in just a second here, and I should get it in if I can remember how to spell TBT. Dow down 70, S&P down 2, NASDAQ up 5.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, folks, we've got a trade alert that just triggered here that we have to keep an eye on. I posted a chart for the euro on the daily basis, and as you know, we've been bearish this since the 138 level. We're down around 136, a little under 136 right now. But what we're doing is we only had a 0.382 retracement from the high up at 138. We came down to 135.5, and then we rallied up to 137, which was just about the 38% retracement. And now if we break below 135.50, that sets up a price objective of about 133 to 132.50 in the euro. As you can see from the daily chart, this market has been in a downtrend for a great deal of time, and if we break below that 135 level, that's going to tell us that technically that we should be heading down into that 133, 132 level, which is a considerable amount. That's 10%, a little more than a 10% move in the euro currency, which means the dollar would would be increasing in price. So that's that's the bottom line. So we'll see. Someone asked a question about Bitcoin. I have no idea what it is. I know it's cyber currency or cyber terrorism or something. I don't know what it is. It's a cyber currency. I've read about it. I still don't understand it. and but I don't know anybody. None of my friends have ever been involved with it. So until I see more about it, I wouldn't mind seeing it trade, because I know that it moves from $1,000 to $500 in a matter of a few days. But you know, what exchange it'll be on would be anybody's guess. I don't know what exchange it trades on now, so that really doesn't affect us, you know, too much. So keep in mind that the thing that I started the show with today was the long-term ABCD pattern on the monthly chart on the transportation index. It's completed now, and reversed below the 1.618 at least so far today. So we will, you know, keep an eye on that, and it'll give us a better idea of where we stand. But if you're involved with foreign currency, you know, keep an eye on this euro, because if it gets below that 135 level, it's got to target at least 10% or more below that level. So keep it in mind if you do trade foreign currency. The other one we looked at, of course, was the Japanese yen, and that one also from that 165 level has, from the 105 level has broken down, you know, quite a bit. It's broken down several $1,000s this week on the Japanese yen, and that was based on the correlation with the Nikkei Dow, because the Nikkei Dow has about a 90% correlation with the U.S. dollar, Japanese yen currency. No other currency tracks like that. I mean, it's real that I know of. I mean, of the majors, I'm sure you find something in Bangladesh or someplace like that, but there is nothing in the majors that has any type of a correlation like that. So when the yen goes down, the Nikkei Dow goes down. That's the bottom line of what it looks like here. The Dow's still down about 73 on a day. We got another bifurcated market. The composite is basically unchanged. The Nasdaq is up 4. The S&P's down 3. So we're having a big, just a typical rollover type market with nobody caring, and the VIX index is saying that. But eventually the VIX index is going to ring a bell, and people are going to start, taking a look at it. One of our listeners asked about Apple. And as long as Apple stays below the 565, 570 level, it looks bearish to me. So live every day in an attitude of gratitude, my friends, and may God bless. And take care of somebody that has less than you today.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.